Good evening to all the participants for the today's webinar. We have with us today's faculty, CA Bhavesh Thakkar. CA Bhavesh Thakkar, right now the partner of E&Y. He is particularly expertise in production linked incentives and other incentives, and he has been as a partner of E&Y from July 2019 to right now. He was earlier the executive director from October 2016 to 2019, then the executive director, as well as he was a partner in Saha Khandelwal Jain and Associates Chartered Accountants. And earlier he was the partner of Video India. He has a vast experience in that particular context of that MSME. And if you are going for that particular context, he is the experienced person in that whatever he is working right now in that incentives. So with this, we welcome CA Bhavesh Thakkar to this session. I am handing over the session to CA Bhavesh Thakkar.
Good evening to all, and thank you, Sambitji, for that introduction. So, and thanks for the opportunity also to present my thoughts on the various incentives and specifically on the textile scheme production link incentive which has come across. So probably what we'll do is I'll try to cover the content and most of it. So we have a 2-hour session, but I will try to cover some of the contents in detail, and post that we'll keep 15 or 20 minutes for questions also. So if there are any questions, please feel free to add in the chat box, or rather we'll see how to address that. But yes,
here the chat box is not active, so that at the end of the session we can ask the questions.
Yeah. So we will ask the questions at the end of the session, and we'll keep 15-20 minutes. So all the queries, whichever I am able to address, we are able to take that. So just before we get more granular on the topic of PLI for textiles, it is very important to understand the base of all these PLI schemes. So all these PLI schemes, so there were almost 13 policies which have been declared, and if you add the drone, it is a 14 policies, 14 sectors rather, which have been covered by this PLI. The scheme intent is largely to encourage domestic manufacture, promotion of exports, and higher import substitution. So if you are able to meet these 3 criteria, these are the sectors which are actually going to get PLI preference. So along with these 14 sectors which have already been declared, we also understand that they are looking at other sectors like chemicals, or rather toys, defense aerospace industry. Those kind of sectors, they are looking at incentivizing by way of a PLI scheme. So whichever sector actually meets this criteria of PLI, that's line ministries approaching the Niti Aayog and the central ministry to bring a PLI. So just now what you see are the 14 sectors which are coming, but I am seeing more and more PLI schemes coming in. So from a central government perspective, if you see, PLI is going to be the template around which these kind of schemes are going to work. So if you see how PLI would be, all the central government policies or sectors, the incentive would be in the form of the PLI which is there. So this is going to be somewhere we'll have to keep our ears and eyes open to what newer schemes comes into this. So the intention of a PLI is to develop world-class manufacturing. So this is not largely for trading and that kind of a thing. So this is for world-class manufacturing if you are doing. So they wanted to bring India as a manufacturing destination. And friend, there is a certain reason for that also. If you see presently our population, 65% of our population is below 35 years of age. So we somewhere have a very huge demographic dividend. We have a very robust young working population, I would say. So it is very important that we are able to provide them with employment. And you will agree, friends, that most of the employment comes from manufacturing sector. I'm not disregarding the service sector, but the multiplier effect what a manufacturing sector has is absolutely important. So it was very, very important to look at providing employment to this huge population which is there. So Make in India or Atmanirbhar Bharat are all cornerstones along that whole manufacturing sector growth which is there. Now, if you don't provide them employment, this huge demographic dividend what we are having can become a demographic disaster. So that is why Make in India, I always say for anyone that Make in India was not a choice. Make in India is a compulsion. Any government which would have come across, they should have brought in Make in India. So Make in India, Atmanirbhar Bharat, whatever these chimes are, we will PLI will largely be adhered to whatever the motives of those schemes are. So just now, as we see, there are handpicked, as I told, thrust sectors, what they are looking at when they are looking at PLI. There are 13 sectors which are given. The incentive does not bifurcate between a global and a domestic player. Yeah, there may be eligibility criteria which may be a bit different, but the incentive does not bifurcate whether you are a global player or a domestic player. Both of them do get incentives. The base of a PLI is it is a percentage of your incremental turnover. I will say most of the schemes of PLI, one or two are a bit different, but base of a PLI, this is that you produce more, you will get larger incentives. So let me take an example. So most of the schemes, they have told that 31st March 20 is your base year. So, and your sale is 100, suppose, as on 31st March 20. Now, today you are doing a sale of 150. Then 50 is considered as the incremental turnover. And on that incremental turnover, you will get a percentage of subsidy, which may range from 8 to 13% in this case in the textile policy. And we will come more granular on that one. So investment can be a eligibility criteria, but the subsidy will be largely based on the sale criteria. So that is there. So the intention why they wanted to link it with turnover was also due to the reason that they wanted to see that you produce more, you get more incentives. So they want outcome-based subsidy. So there were also previous subsidies which were there, but there was no guarantee of an outcome. Here, you do that outcome, you get that subsidy. Now, what that outcome is, what is that expectation, we will see slowly. But this is how a PLI scheme will largely be worked. Now, PLI is not a open for all scheme, if I want to say. This will not be a open for all. This is restricted largely to champion players. Yeah, there were some PLI schemes, like if you look at pharma or if you look at probably food processing, there was some scope for MSME sector also to get into this. But largely, if you look at textile, this is a champion product scheme, champion player scheme rather, and we will go more in detail on that. Chosen applicants given recurring incentive as a percentage of sale turnover, which we discussed. And scheme implementation is by the concerned ministries. But what they have done in these schemes are, they have also appointed a project management agency. Now, this project management agency are largely professional bodies like IFCI or SIDBI, or those have been the bodies which are actually looking at implementing this policy. So the government wanted to keep it a bit objective and also lesser interference. So all of this project implementation, and even when the refunds come in, this will be done by the project management agency when the disbursement and all that stage also kicks in. So that is important here. Now, what has been the response till now? Like on the first initial launch, the government identified 3 sectors through incentivized global and domestic players. So incentive percentage on the incremental, this came in somewhere March 2020. So there were 3 schemes which they had bought in. One was mobile phone, second was the critical medical drugs and manufacturing of medical devices. So mobile phone as a scheme was launched on 1st April 20, and this was just the start of the lockdown. And this, as I told, was for a limited people and limited because there were very, very large players getting into it. So they approved 16 applications. So what is a committed investment? We are looking of a committed investment of 11,000 crores over the few years. So see the response what you are getting for this schemes. If you see, you have a committed investment of 11,000 crores and you are looking at an employment generation of 2 lakh people. So if you see the mobile phone scheme, this was met with lot of success. And if you see the large players like Wistron or Pegatron, these are all this Apple contract manufacturers, whether it is Wistron, Pegatron, Foxconn, all came into India and they will be availing benefits under this scheme. So this was the first one which met with a super success. Critical medical drugs also, you had 95 applications under review. Your total committed investment is around 5,000 crores. And manufacturing of medical devices also, the total committed investment is around 730 crores. So that is something which all the 3 schemes did. Now in round 2 of this one, there was IT hardware products also like laptops and all this which got approval. So 19 applications were filed, which included 14 domestic manufacturers. The committed investment is 2,350 crores and the ability to generate around 37,500 jobs. So this is how the 4 schemes which have closed got a good response. Now, where do we stand today? These are the other sectors on which PLI has been announced, and we are at the stage of getting approvals or done. So PLI schemes which are closed for applications and which are just now at the evaluation stage with the project management agency are these 5 sectors, where it is white goods, high efficiency solar modules, solar PV modules, food processing, pharma, and telecom and networking. So those are the 5 which are there at this point of time, which are closed for applications, but they are still under the evaluation stage. So we don't know what's going to be the final outcome on this one. But at least on the food processing and pharma, I can say there was very, very good response. And people actually thronged and filed the applications. So pharma, we understand, are around 150, 160 applications. Food processing, we are looking at large number of applications. So I will say on that sense, this has been a very, very successful scheme to look at. Schemes which are approved, but the application process is yet to begin, is the automobile auto, textile, ACC batteries, and specialty steel. So this is something which is there, which is live at this point of time. And for today's discussion, we will be discussing textile products in some brief, in some detail rather, if I want to put across. Though this is something which we'll be covering in detail for today, but these schemes are approved and the online portal will be activated in some point of time. Now let's go more granular on the production link incentives for textile sector. So the scheme intent, if you see, is to leverage economies of scale. The scheme will help Indian companies to emerge as global champions. So a lot of this textile, if you see the sector as such, so there, if you see, lot of the work what we are doing is very low end value chain of the textile. So the intention here is to get into the high end value chain. So even if you look at the product list what they have selected, the intention is to develop economies of scale and get into the high level, high value chain of the manufacturing. So, and for Indian companies to emerge as global champions. Incentives worth of almost 11,000 crores has been proposed in the scheme. So if you see, friends, the overall budgetary allocation for PLI scheme has been a handsome 1 lakh almost 70,000 crores. Now 1,70,000 crores is a huge sum, and you'll be getting this incentive over a 5 or a 7-year period, depending on scheme to scheme, and modalities may be different for some of them. So this is a very handsome budgetary allocation what they have done for these schemes. So out of that 1,70,000 crores, 10,683 is given to the textile sector, which is, I will say, a very handsome allocation to look at. The scheme intent is to attract fresh investment of 19,000 crores, generate additional employment of almost 7.5 lakhs people. And why they actually chose textile and food processing and auto. So along with the so mobile and all those are also there, but these three sectors actually generate employment. Textile is a very labor intensive kind of a thing, and where you actually generate large scale employment. So the intention here is to generate almost employment of 7.5 lakh people and production turnover more than 3 lakh crores in 5 years. So that's the scheme intent which it started with. And we'll have to really see whether it meets with the success when we are looking at this scheme. The scheme metrics is provide turnover linked subsidy to eligible manufacturers. And they have given a list of products also which will be there. So we will come slightly in detail when we come at the product list. The incentive proposed to industry for achieving intended incremental turnover. Now here there are a lot of concerns. And I'll tell you the practical challenges also what companies are facing when they are looking at this incremental turnover, because what we understand just now and what comes out in the scheme, the limit which they have set is quite high. So for turnover or whether to meet that year-on-year turnover, the limits which they have set is quite high. And there are some representations going on, but we'll have to see how it really comes across. This is the first of the PLI schemes where higher priority is given for investments which have been made in aspirational districts and underdeveloped part of the country, if I want to say. So if you are coming up in an investment in Gujarat and in Maharashtra, which is supposedly a developed part of the country, you will have lesser point weightage as compared to if you are coming up in Orissa or in Andhra Pradesh. So that is something which is there. So they want to also develop the underdeveloped part of the country. So that investment in Orissa or Andhra Pradesh or Madhya Pradesh will give a higher priority as compared to what they give in a Madhya Pradesh or rather in a Maharashtra or a Gujarat, which is or Tamil Nadu, which is supposedly a developed industrially, if I want to say. So the intention is that the scheme will positively impact the textile belts, which are Gujarat, UP, Maharashtra, Tamil Nadu, etc. So these are some of the states which will definitely benefit. The scheme has been approved by the government on 8th September 2021. Though the online portal is not active, but at this point of time, the scheme has been approved by the government as on 8th September 2021. And we'll come to the procedural parts also at some point of time. Now, what they have done here is the scheme starts with the eligibility criteria that you need to invest at least 100 crores or 300 crores. So they have divided this into two segments, I would say. So there is a 100 crore segment and there is a 300 crore segment. And we'll come more detail on that. What they are doing here is for making this 100 or this 300 crore investment, they are giving you a gestation period of FY 22-23 and 23-24. So you can actually count your investment which you are going to do for this first 2 years. Why 22-23 and 23-24 is because, see, if you are already in October 2021 and half of the year is more than half of the year, financial year is already gone. So that's why the investment what you do in 22-23 and 23-24 in these two gestation years which they have given you to make the investment, and then the actual incentives will start for 5 years, which will be from 24-25 to 28-29. So the first year of incentive which you will be able to claim would be 2024-25, and it will be up to 2028-29. So this is something we'll have to keep in mind while we are looking at investment or any kind of planning. And there are some nitty-gritties around that also, which we'll like to cover. The operational guidelines, and as I told, the online portal is still under process, but largely the scheme criteria which are been given would be the same, and we'll have to adhere to that ones to apply under this subsidies. Now, what they have done here, obviously, the eligibility criteria and all that is there, large scale employment, generate employment, boost exports. So that's the scheme intent which is there. Now, what is the difference between this 100 crore investment and a 300 crore investment? So if you are making a 100 crore, what do you get? If you are making a 300 crore, what do we get? And we will be taking some live examples also to understand how the incentive works. The only difference which we see is on the percentage of incentive. So if you have a minimum investment of 300 crores, your incentive percentage for the first year would be 15%, then 14, 13, 12, and 11. So it tapers down, the incentive percentage tapers down, and you come down from 15 to 11%. So that is something we'll have to see. And if you are doing 100 crores investment, your incentive starts with 11%, 11, 10, 9, 8, 7. So the only conceptual difference, if you see, between these two eligibility criteria is 300 and 100 crores investment is the percentage of incentive. Rest the methodology and how the incentive will be calculated, what is included in this 100 or 300 crores, all will be the same. It is just the percentage of incentive which we'll have to keep in mind. Now let's go more granular on these two which are there, which talks of a 100 crore or 300 crore. The applicant, part one of the scheme is applicant willing to do a minimum investment of 300 crores in notified product lines, and we'll come to that product lines also. Applicants would have 2 years of gestation period, FY 22-23 and 23-24. Now, and the first year of incentive, if you see, would be FY 24-25. That will be the first year when the incentive will actually start. Applicant would be required to achieve a minimum turnover of 600 crores of eligible products. So suppose you are manufacturing 50 products and 25 are eligible, that eligible product sale has to be 600 crores. So if you see 300 crores is the investment limit, the turnover is double of that. So they are talking about 300 crores and the investment to be 300 crores and the turnover to be 600 crores. So that is how it is going to work here when they are looking at this incentive. So you should attain a turnover of 300 crores to begin with. Rather, an investment of 300 crores and a turnover of 600 crores to be eligible to be claiming incentives under this scheme. So am I audible now? Is there any issue? Because I just changed to a headset. Am I audible now, please? If someone can confirm. Thank you. Thank you. So this is something we'll have to keep in mind of the 100 and the rather 300 and the 600 crores. Now, this is very, very important. The fourth bullet, what you are saying is very, very important. From year number 1, you need to have a turnover of 600 crores. From year 2 to year 5, you need to achieve a minimum 25% of additional turnover over the immediately preceding year. Now, here, if I see, this is slightly, I will say, even if I take a very, very booming industry, I am talking of a very high ask here. You are saying that आपका turnover last year से 25% up होना चाहिए. Now, this is something which is a critical condition. And without that, they are saying that you will not be able to claim those incentives. So for the first year, if we look at a turnover of 600 crores, the next year turnover has to be 125% of that, which has to be 750 crores. Friends, in any of the industry, 25% achieving turnover is not simple, additional turnover as compared to last year. So this is something which the government needs to consider. They have come out with this condition. And let me give some basis of the other PLIs also which came in. So other PLIs also came up with some conditions and what needs to be invested or what are the turnover and criteria. But wherever they got responses, on a large scale and the scheme was overflowing with responses, they have not changed their conditions. But wherever companies have told that this kind of a condition is not possible and will not be able to meet it, they were able to relax. So it needs to be shown as an industry concern because this kind of a turnover we cannot achieve actually. So if companies keep representing on this front, I'm sure the government will have to look at this sympathetically. But as we stand today, this is a 25% additional turnover which they need to achieve. The rate of incentive we discussed is a 15% in year one and thereafter reduced by 1% on each year-to-year basis. So this is something which we already discussed. Now, what is part two? Largely, if you see the intention of a part one and part two is the same. It talks about 100 crore investment and applicants again will have a 2-year justification period of 22-23 and 23-24. The turnover year what you'll have to achieve is a 200 crore. So for 300 crore investment, it's a 600 crore turnover. For 100 crore investment, it's a 200 crore turnover. And then you again maintain that 25% condition. And we discussed it that the rate of incentive would be 11% in year one and thereafter reduced by 1% in each of the years. So this is something we'll have to keep in mind. Now, let's look at the other key conditions which are there, which are again very, very important, I would say, because these are the conditions. If you are not able to comply, you will not be eligible for this subsidies. Only manufacturing companies registered in India would be eligible. So please keep in mind, only companies registered in India would be eligible. There's an additional condition over there also, which we will cover in a bit. It also talks about goods removed from factory under GST invoices and sold in India or exported will be considered for calculation of the incremental turnover. Now, the good part over here is they are not differentiating between what is a domestic turnover and what is a export turnover. So whatever you are producing and you are selling from India, whether it is sold in domestic India or exported, that's not a cause of concern. You will be eligible to claim the benefits on that. So all these PLI schemes, if you see as a base, do not differentiate between a domestic turnover and export turnover, if I want to say. So both of them do get incentivized under this scheme. Turnover from trading or job work will be excluded. So as we see, the intention is to build up large-scale manufacturing facilities. So turnover from trading and job work will be excluded. Goods manufactured by the other units of the same company or the same group rather would also not be considered for the calculation of the turnover or the incremental turnover. So this will be plain sales what you will be doing from your applicant company which is applying. Now, this is other than the 25% value add which is there, a 25% incremental which is there. The project proposals are expected to maintain a minimum value enhancement of 60% in case of manufacturing integrated fiber yarn to fabric garment and textile, and 30% in case of independent fabric processing house. Now, here if you see friends who are knowledgeable of this industry as such, to maintain a value enhancement of 60% or 30% is really not going to be simple out here. And this is not a condition which will be met by many of these guys. So then there was also a discussion, okay, was this scheme actually then brought in to incentivize investors, or you are putting these kind of conditions where no one will probably end up getting those incentives? Because two conditions which we saw, three rather, to invest 300 crores or 100 crores itself is a challenge for many of those companies. Textile industry at some point of time does not require that level of investment. Then you are talking that you need to have a year-on-year 25% increment in the turnover, which is again not very simple. And you are talking of a minimum value enhancement of 60% also and 30% in case of independent fabric processing house. Now, all these three conditions, if you see, These are not simple conditions to meet. You will not see that all the companies will be able to meet these conditions which are there. So government would have to be considerate on this, but all will depend once the scheme window opens कि इनको क्या response मिलता है उस चीज का. And if they get an adequate response, obviously they will say कि no, let's continue with these conditions which are there. Now the next bullet is very, very important. So before making the eligible investment under the scheme, the applicants are required to form a separate company under Companies Act 2013. So this 100 or 300 crores, you will have to invest in a separate company. So let me tell you, all partnership firms, LLPs, proprietorship will not be eligible to claim under this scheme till the time they don't open a separate company. And the important part is the eligible investment has to be made in the new company. And that's why now, if you link, they have started the eligibility period from 20 to 23, the investment period. Because aaj aap ek company form karoge, you will get that company registered, you will take GST registration, you will do all the formalities. So this will take around 2-3 months. And then post that, you will put machinery orders and all that stuff. Then the eligible investment which is counted will be only counted what you have done in the new company. So this is a very, very important condition. Why they did that? Frankly, in other PLIs, it was not that restricted. Why they have done it here is something to be seen. But if you look at food PLI or pharma PLI, there was no restriction to come up with a separate company. So as chartered accountants, if we see, we were in an era पहले कि बहुत multiple entities वगैरह होती थी, हम बोलते थे कि नहीं ये तो बहुत ज़्यादा entities हो गए. Then we started consolidating each of these. And अगर घर पे 10 firm है तो we used to say let's now reduce the number of firms and bring it as a consolidated exercise. Now with the new income tax rate and probably with these kind of schemes, are we going back to a regime that we should have more and more companies? So I don't have an answer for that, but this is something which is not in the whole, if you see the spirit of consolidation, which we used to do and like try to make one larger entity rather than bringing in all subsets and sister concerns. So here it talks about, and this is a very, very important condition, that the company has to be formed before making the eligible investment. Now, this is also very important that the group may submit multiple applications. So now within larger groups, you can have multiple applications being filed, but finally only one company of the group would be selected. You can file 5 applications, but जब उसका approval और ये process आएगा, it will be only one company which will be selected, and we will come to that process also. They have also given a ranking system here. As I told that not all the investment which will be companies which will be proposing 100 crore or a 300 crore investment would be eligible for incentives. So there will be a ranking system which we'll also cover in bit of a detail here. Moving ahead, yeah. So I thought so I will take a very simple example here. So it will make things simpler for us. So here you see the year. So the year first one is 2024-25. That is considered as the first year of incentive. Now the turnover for that year, if you see, is 600 crores. So that is the notified turnover. And as this is the first year, the 600 crores is the incremental turnover also, right? So on that 600 crores, now there is one more very, very important cap here. What they are saying, that though your 600 crores pay, you need to touch a 25% year-on-year growth, but even on that incremental, there cannot be more than 10% ceiling. So they have applied a 10% ceiling over that 25%. So उसके ऊपर आपका turnover गया तो भी आपको ceiling तो 10% में ही रहेगा. We'll come to that. We'll come to that. So what we are saying here, 600 ka 25% is something which we should attain, and the upper limit of that is 704 crores. That is how it comes. So 600 ka 25% comes to 150, and 150 ka 10% comes to 15. So that's how we will have to look at 600 ka 20 percentage. So that is how the upper ceiling has been worked out. So in this example, we have tried to keep it simple. Turnover of notified goods is 600. Your incremental turnover is 600. So the turnover considered for incentive is 600. Incentive rate for the first year is 15%. So your incentive in INR is 90 crores. So that is something which you'll have to sit it from the first year perspective. Second year, your turnover suppose is 760 in year 2. Then your incremental turnover is 160 as compared to 600. Now 160 divided by 600 gives us 27%. So 25% आपको करना ही था, you have done 27%. So that is something which is good. So then your upper limit is 10% of that is what we discussed. So turnover जो आपका consider हुआ is 760. उस 760 पे पूरा you will get 14% incentive, which will be 106. So just to repeat this, 760 is the turnover of the notified goods. So the incremental turnover is 160, which meets the criteria of 27% because 25 is the minimum. So 14% is the incentive rate. You will get 106. Take year number 3. Year number 3 talks about 1,000 crores investment, 1,000 crores turnover. So the incremental turnover, which was expected year, was actually 760. से अगर आप compare करोगे 1,000, so we have done an incremental turnover of 240 crores. We have touched a threshold of 32%. So good that we have met the condition of 25%. So your turnover, which will be 1,000 crores, will be considered for 30% incentive, which is 130 crores. Now the fourth year is interesting. 1,400 crores is the turnover. So your incremental turnover is 400. Now here you have touched 40%. So आपने 25 का मीट कर लिया, but you have touched the upper ceiling of 10% also. So यहाँ पे ये लोग जो upper ceiling लगाएंगे वो 1350 की लगाएंगे, which is 35% of 1,000 crores. And here you will be able to claim the incentive at 350 by 12%. And last year is also very, very interesting. You did a turnover of 1,600 crores. So your incremental turnover is 200 crores. Now 200 crores divided by 1,400 crores will give you an incremental growth rate of only 14%. So you have not met the 25% condition. So there will be no incentive for this year. So slightly they have complicated this calculation with this upper slab of 10%. Why they did that, I didn't know. So एक आप बोलते हो कि आपने 25% मीट करना चाहिए, फिर आप बोलते हो लेकिन 25 के भी ऊपर आप 10% और ऊपर चले गए तो हम तो 10% के ऊपर ही नहीं देंगे आपको. So this is not something the intention. The intention should have been that you produce more, you get more. But this is how things are. So year number 5 is very, very important. जहां आपको वो 25% का criteria अगर नहीं meet होता है, you will not get the incentive for that year. Now the good part of this scheme is that you will be debarred from claiming the incentive for that year if you don't meet that condition. But this will not debar you from claiming the incentive from the balance year when you meet that condition. So this is a very, very good part of the scheme. So the good part is that एक बार आपका एक साल वो condition meet नहीं हुआ, that doesn't mean you cannot claim the incentive for any of the period. You will still be able to claim in the year when you are meeting that condition. So that's a good part to look at. And similar example we have taken for 100 to 300 crore kind of an investment where you should have a turnover of 200. This is simpler to now see. So year if you see year 3 we are meeting a 18%. So we are not touching that 25% criteria. So you are not getting incentive for that year. The only change here is that the incentive percentage, if you see, has gone down as compared to a 300 crore scheme. So you have 11, 10, 9, 8, 7, which was 15, 14, 13, 12, 11 in the earlier one. So the only difference, if you see, is on the percentage of incentive. But as a cause of concern, I will say 3 causes of concern here, as I told again. The 100 crore investment, the 25% year-on-year growth, and above that also you are putting a restriction of 10%. So these are some causes of concern which are there in the scheme. which the government should consider sympathetically, is what our thought here is. Now, what are the challenges? And these were some of the challenges which I thought would be important out here, which companies will have to look. So first is, considering the nature of the industry, achieving the ratio of capex of the turnover of 1:2 seems to be very difficult. Further, if the company fails to achieve the minimum turnover of 600 or 200 crore in year one, the participation would be restricted in the first phase itself. Sir, अगर आपका first year में ही 600 crore या 200 crore का turnover नहीं हो रहा है, so you will not be eligible under the scheme. So this is not something which is there. So if you see a asset turnover ratio, normally इस टाइप का 1:2 is really difficult. आप बोल रहे हो 300 करोड़ आप इन्वेस्ट करो और आप 600 करोड़ का टर्नओवर करो. This is not really very simple, to be honest. Or you do a 100 crore investment and you do a 200 crore sale. So these are some factors which they will have to consider. और पहले साल में if you don't do that 600 crores or 200 crores of year, then you are not eligible for the scheme. So that is not something they should do. They should look at restricting these limits which are there. Now, if you see the industry trends, or आप किसी का भी balance sheet ले लो, you look at the textile industry balance sheet or the overall growth percentage what the textile sector has, honestly 25% is something which is not there in the industry. It is far, far beyond the actual growth rate which the industry has witnessed in the last 5-6 years. So having a growth rate of 25% is really something which even not the champion players would be able to beat. So yeah, again, there is a discussion going on, okay, then is this only incentive for a namesake or will there be actual disbursements happening? I'm sure when those relevant years come of 24-25, they will have to restrict some of these conditions. So mobile scheme bhi jo last year mein aayi thi, when they came up with the mobile scheme, that also talked about that you needed to do specific investment in 21-22. Now, due to the COVID scenario and all that stuff, government has relaxed that condition and they have been given a 1-year extension. Now, this is something which was important. Otherwise, जहाँ पे आज lockdown ही था, what investment you are going to do and what you are really going to look at. So those kind of conditions were relaxed by the government, looking at the concerns from the industry. So when you actually start claiming this incentive in 24-25 or 25-26 financial year, at that point of time, whether they can look at relaxing this 25% condition, I don't have an answer, but this is something which we'll have to look at. क्योंकि अगर आप आज के दिन से देख रहे हो तो ये टाइप का growth standard Indian textile industry में नहीं है. So they will have to keep this in mind. Third important challenge is the industry as a whole. If you see the textile sector as a whole, or companies having manufacturing premises, they are not that integrated where activities from yarn to fabric to apparel to garment is done in the single factory premises. यहाँ आप देखोगे तो unit number 1 यहाँ पर होगा, there will be a unit number 2 somewhere else. Therefore, the value enhancement of 60% or 30% would rarely be observed. तो ये इतना simple नहीं है, if I want to say. Now, one group, one participant, this itself will restrict the investment and therefore affect the real motto behind the scheme of creating global champions. तो आप बोल रहे हो एक ग्रुप में एक ही एप्लीकेंट फाइल कर पाएगा and that will be the applicant which will be selected. So that guy will have to do the investment. So if there are 4 divisions of a company or 4 entities in a group and doing different processes, so uska aap investment consider nahi karne wale ho. So this is going to be a bit difficult to really look at. And the fifth and the most important condition or challenges which is there, the applicants are required to form a separate company. Now this, friends, again, as I told you, adding to all the legal compliances, you should have a separate company, a separate balance sheet, separate auditors. So this is not the overall spirit where it should have been. And what you have done in 21-22, right, from April से लेके अभी PLI scheme तो announce काफी पहले हो गई थी. So most of the companies would have also thought के let's start investing, right? Now this will disregard the investment what you have done in FY 21-22. Now that is not correct. they should consider whether the investments done in 21-22, because this PLI scheme announcement, if you see, came in last Diwali during November 2020. So वहां से लेके अगर एक entrepreneur of or if a industry has thought, okay, let's try to bring that investment, and if you have done any investment in 21-22, then what do you do? So there is no clarity with regards to investment done through merger acquisition or amalgamation. And also the important part is what happens for investment in this 21-22. So they should consider this as something to be seen, and there should be some weightage given to this. So, and also second-hand machineries, merger amalgamation, iska there is no mention. So if you look at this overall challenges which are there, the 5 challenges which we are showing here, many of the applicants will actually think whether we should apply under this scheme. एक मैं कमिटमेंट दे रहा हूं 100 या 300 करोड़ का, दे भी दूं, मैंने वो इन्वेस्टमेंट कर भी ली, तो भी will I be able to meet that condition of a 600 crore or 200 crore? And then post that also, would I be able to make a 25% addition here? And then whether I'll be able to look at a value add or other value enhancement of 60 or 30%. So this is something which is not so simple. So whether all the industry players are gung-ho about it. So let me tell you, at this point of time, many of the players are thinking, okay, this is not worth making an application at this point. Some of those conditions will have to be relaxed to look at these criteria. But yes, this is what it is today, and we'll have to see how that operates. Now, these are the list of the notified products which are there. And what they have done here is, they have notified these products on the basis of the HSN codes. And they have gone up to not 4 or 6 digit, they have gone up to 8-digit HSN codes. So these are the man-made fabrics, apparel and man-made fabrics, so which are there, which has been considered as an eligible project list. And if you see on the screen, you have the jerseys, pullovers, cardigans, and also woven fabrics of yarn containing 85% weight. So those are all the HSN codes descriptions which are there. And we'll not go in detail of what those product lists is, because this will become too technical and this is more industry specific, I would say. But this is something which would be there as a MMF apparel and MMF fabrics. Now here, if you see in this whole textile regime in India, actually, who are you competing with? If you look at this point of time on exports and all that stuff of the figures, the largest competitor to India at this point of time on exports of textiles is not another country, but it is Bangladesh. Bangladesh is our real competitor in the textile sector. If you see the level of infrastructure they have built up in this space in the last some years, it has really been phenomenal. So Bangladesh is actually our competitor in the textile sector. So to break this monopoly and the investments going in Bangladesh, these schemes have been brought across, and obviously the employment generation which is there in this scheme actually attracts us to this scheme. And these are the 10 segments of the technical textiles. Now, somewhere textile mane apna jo ek interpretation rehta hai is kapda. But if you look at technical textile, so if you look at geotextiles, agro-textile, these are called technical textiles. Now, here is a sector where we are clearly lacking. And on this, they have tried to include 10 segments, products of technical textiles also. So if some of your companies, our clients, are actually looking into investment in these sectors, this is something which you can look at. So let us take 5 or 6 examples here. So if you are looking at geotextiles, so you have this geo grids, geo nets. So if you see the practical application of it, if you travel through the Pune-Bombay Express Highway, on any of those express highways, you have those mountains which are there, which are covered by a jali, a net is there. That is actually geo net. So that is considered a part of the technical textile sector. Aapko lagega koi wo steel ya aluminum ka hai, that is actually textile. So it's part of the geotextile. So this may be products which you in a normal parlance will feel this is something else, but it's a part of the geotextile. Then you have agro textiles. You have shade nets and all that, which you see on the nursery and all that done. So fishing nets, crop covers. So all those would be a part of the agro textiles. And you have mobile textile also, like tire cord fabric and polyester safety airbags. So all your safety equipments in a car and all those airbags are part of mobile textiles. If you see bulletproof jackets, vest, uniform, these are all part of the defense textile. Interestingly, body diapers, adult diapers, these are all a part of the medical hygiene textiles. So they have really bought this 10 segments which they feel would really enhance the capacity of technical textile. Large part of this technical textile at this point of time in the country is imported. So this is very, very important to build this manufacturing capacities in the country. So then in that sense, we are able to look at more and more manufacturing in this space. Obviously, sport textiles like protective equipment for cricket, boxing, and other sports, leg guard, batting gloves, all that is a part of the sports textiles. These are normally we feel that these are not related to textile, but these are technical textiles. And the last four over here are the protective textile, like personal protective equipment for medical use, which was this PPE kits, if you see, specialty fibers, smart textiles, and building construction textiles. So you have architectural membrane. And just what they have done is the list of technical textiles is just now what they have given is indicative. So if they feel that some of those products need to be added here, you can actually represent to the central government and try to get a relaxation here and get your product included in the technical textiles category, which is there. So this was on how textile schemes or the PLI works. As I told that there is a certain challenge around this when you're looking at the investment criteria and all that stuff. So people will have to represent on this and get some of those conditions relaxed. Now, just spending some time on the process also on how the scheme works. So this scheme, as we told, got notified on 8th September 2021. And typically how a PLI scheme works is they will come with the operational guideline and they will come with a portal. So these all applications largely are an online portal. And along with that, they will also appoint a project management agency. As I told, project management agencies are largely professional bodies like IFCI or SIDBI, which will get into appraisal of this. Now, normally what we have seen, so suppose if the portal goes live on 15th November, I'm just giving an example here. We understand that by that time the portal would be live. So if the portal goes live on 15th November, you can actually look at a 60 or a 90-day window for us to apply under the scheme. So if the portal goes live on 15th November, you will have time till probably a 15th January or 15th February to apply under this scheme. Now, at the time of application, obviously you will have to give all the details which are there, make the online filing, make the applications which are there, and file the application. And then the project management agency will actually do appraisal of your file. And they will see whether the details, what you have received is correct. There will be certifications which will be required by chartered accountants, chartered engineer, कि whether आप ये investment कैसे करने वाले हो, what is your balance sheet for 31st March 21 or 20. All those criteria will be looked into, new company आपकी कब form हुई है. So all those appraisals would happen. And the project management agency will devise a ranking system here. And these ranking system depends on multiple factors, if you see. So what we understand just now, though it's not there in the public domain, what we understand just now that this is going to be a 70 marks ranking which is there. So the factors which will be, so the highest ranking parameter what they have given under the scheme is to your location. So they are very, very clear that they want to incentivize someone who is coming in an underdeveloped part of the country. So 20 marks of the 70 marks are actually being given as a weightage to the location. Second important criteria what they are going to look at is the direct employment generation. अगर आप बोलते हो कि you are going to employ 100 people and I will say कि I am going to employ 500 people, definitely I will get a weightage there. And I will be able to claim higher rating as compared to you. The technical capacity of the applicant, like आप क्या क्या करने जा रहे हो, whether you are doing the whole value chain or you are doing just a process of that value chain. So all that would be very, very important to look at. Your product line. Important would also be what is your net worth. So अगर मेरा net worth 100 crore है और आपका 150 crore है, you will get a higher rating there. So on the basis of this, they will be rating and shortlisting the applicants. On the basis of that ranking, they will finally give you a approval. And then post that approval, you claim those incentives in year number 24, 25, which is the first year. Now, what was a typical feature in previous schemes is, after the approval, they may ask you for a bank guarantee. Now, why this is important? Why this bank guarantee is important? नहीं तो क्या हो जाएगा कि आप अगर डाल दोगे 100 करोड़ and you don't have any plans to invest 100 crore, then what is your penalty? There should be some penalty. Otherwise, what is happening? You are blocking someone's seat. This is a limited scheme. No? You are blocking someone's seat. You got that seat, and now you are not going to invest that 100 crores. Then what will the government do? They will have to go back to someone who is planning to invest. So then in that case, though it is not in this guideline, this is how PLI works. They will tell you to furnish a bank guarantee of the amount of the investment of certain percentage of the amount. So अगर आप बोल रहे हो आप 200 करोड़ करोगे, they will say give us a 2% bank guarantee or a 3% bank guarantee, and we will wait for these guidelines. But on that 2 or 3% bank guarantee, if you don't meet that committed investment in year number 1 or year number 2, the 2 years gestation which has been given to you, that bank guarantee can be encashed. So while making the application, and as professionals, we'll have to guide our clients very, very correctly, that while making the application, just not make application for the heck of it, okay, we'll get a higher marks. You will have to actually meet that investment criteria and all that stuff in the 2 years gestation period. So let's not file application for the heck of filing. We have to get into the groove and give very realistic figures which will be actually eligible as a project cost and which need to be looked at. On the eligibility criteria of 100 or 300 crores, what is considered as an investment? And here chartered accountants can play a very, very large role. So land is not considered as an eligible project cost. So they are not looking at land as a part of the eligible project cost. Plant and machinery would be considered as an eligible project cost. So related to that, the technical fees or the technology royalty which you need to pay may be included here. And the building also, what they are saying, building only the technical building which goes in the construction activity is something which will be considered as part of the eligible project cost. So if I want to put it a bit differently, building which is going in administrative or office admin will not be considered while counting this threshold of 300 or 100 crores. So that is something we'll have to keep in mind. This is a very important thing. So land will not be considered, and all this receipts, disbursement, certifications, all at a later stage would have to be done by statutory auditors or by independent chartered accountants. So of all, and they may do their physical visits to factories and all that stuff, but see the enormous responsibility which has been cast on chartered accountants in these schemes, in all these government schemes. So it will all depend on your certification rather to decide whether the company will be disbursed a sum of 50 crores or 100 crores, whatever is the subsidy for that year. And let me tell you, friends, if you are meeting these conditions, for clients, this is a bonus kind of which comes on. So some companies, as it is, were planning to invest. But along with this PLI, this becomes a big, big cherry on the cake. So they need to plan it correctly and claim those incentives which are eligible. So I always say that when you are looking at a whole capex agenda, look at it holistically. Look at what are those incentives available from the central government, what are those available from the state government, and we will cover it brief on some of those because I wanted to project the whole capex agenda out here. But please don't miss on these incentives because you were to doing the business as you were doing, but please don't miss those incentives. Yeah, there may be a school of thought कि हम शायद incentives के लिए आप factory नहीं लगाओगे, and I'm largely okay with that. I understand. So I always give an example that you buy a car because you need a car. You don't buy a car to just claim depreciation. फिर तो कार उधर सफेदाती करके बाहर खड़ी रहेगी. तो you buy a car because you need a car. But if you buy a car, then at least not miss out claiming those depreciation benefits which are there. So that's what you will not set up a factory to claim incentives, but at least if you are claiming some if you are already setting up a factory, let's not lose the focus on incentive. And friends, if you look at this total capex agenda, what we look, and I will be covering state incentive and mover also, as I told in brief, you can actually look at 100 to 125% of your project cost coming back by way of incentives. So this is really something which we need to look forward to. And this is really something as we as chartered accountants need to plan around this, the whole capex agenda. And who better than chartered accountants who can have a grip on these figures to actually look at these incentives which are there. Coming to part 2 of the discussion, this I'll cover in brief. So along with the central government schemes which are there, we are in an era of competitive federalism among states, where each of these states are fighting for investment to come to the state. You must be hearing, right? This large company has come to Gujarat. So now Tamil Nadu is also trying to woo that. You read those paper articles in Times of India, Economic Times, this company is looking at Bangalore as an investment destination, or this company is selecting Maharashtra as an investment destination. So this is clearly we are in an era of competitive federalism where each of the states are fighting for those kind of investments, and we are in a very exciting space in this one. So what they have done here, if you see from 2014, World Bank rating. So World Bank has always been rating countries on the basis of ease of doing business. So India was at the 142nd rank, and dire we improved, and now we are at the 63rd rank. So that was a very, very good jump what we saw in this 5-year period or 6-year period which is there. Now there is a controversy going on that this ease of doing business ratings was all not correct and China was influencing all of this, but let's not get into that controversy. So in 2014, for the first time, India also got a rating system, and with the help of World Bank itself, where states were being ranked on the basis of ease of doing business. So that is something which was done for the first time in the country. So at this point of time, Andhra Pradesh leads that rating. So on the ease of doing business, के आपने वहाँ पे factories चालू की, तो कितना जल्दी do you get an electricity connection? How fast do you get the land? So all that became an important criteria, and that is something where the ease of doing business of the states also is being ranked. Now, fiscal incentives in India from a state government are largely divided into 3 buckets, if I want to say. These are capital-linked subsidies, expenditure-linked subsidies, and sales-linked subsidies. And we will cover this very briefly. So what are those capital-linked subsidies? So capital-linked subsidies are something which a percentage of your project cost itself comes back to you as a subsidy. So this is something like कि आपने एक plant लगाया and you get 10% of the project cost back subject to a limit of 5 crores. So these are typically the capital linked subsidies which are there. Very, very popular. And state incentive mein, even a MSME player also gets the benefit, and even a large player gets the benefit. So state incentive mein, it will be very, very important to look at whether you qualify under that policy. So these are the capital linked subsidies which are there. Then there are expenditure linked subsidies, like these are in the form of reduction of your property tax, your power tariff, your stamp duty. All of this are the expenditure related subsidies which are there, which are in the form of an exemption or a cashback. And third are the sales linked subsidies which are there. Now, sales link में क्या होता है कि state normally reimburses you GST. So, and more specifically in GST, the SGST portion, because SGST is something which goes to the state government treasury directly and they will try to reimburse that. Let's take a very simple example and how CS can actually play a good role over here. So let's take an example that 100 is your project cost. Your subsidy percentage in that zone is 60%. Let's just take an example. And they will say, so 60 is something which we will give you as a subsidy over a 10-year period. Now, how do I give you back? So 60 is a bearer check, which they will promise. But how will they give you that 60 back? That 60 would be in the form of reimbursement of your SGST, what you pay to the state. जो भी SGST आप pay करोगे state को, a certain percentage of that will come back to you as a subsidy. So see, friends, you are talking of 60 or 70 or 80. So if you are looking at different parts of the state, there's some states which do promise 100% also. So all of that will depend what is your state sale, where your manufacturing plant is. Take an example, if you set up your plant in Maharashtra, right, and you get 60% of the project cost back, depending on which zone you are. But suppose you are having no sale in Maharashtra. All your sale is in Madhya Pradesh or in Gujarat or that. So what will be you levying on your bills? You will be levying IGST and not SGST. So this IGST goes to the central government treasury and not to the state government treasury. And as a concept also, IGST will go to the destination state where the goods are sold and not to the origin state. So what will Maharashtra government give you as incentive? Zero. Because your SGST portion and the contribution to the state is zero. So that is why you still had a bearer check of 60 rupees. But what did you actually encash is zero. So this is something when companies are doing that evaluation, it is very, very important that we as professionals guide them correctly. Let's not get blinded by figures which are there. कि नहीं राजस्थान तो 100% बोल रहा है और महाराष्ट्र तो सिर्फ 60% बोल रहा है सब्सिडी देने का. Guys, those are bearer checks. You need to see what is your actual encashment. आपने 60 और 100 देख के आपने राजस्थान में प्लांट लगा लिया, you realize कि there is no sale in Rajasthan of that client. So what will he get? He will get zero. So this is something where CAs play a very, very important role in this whole evaluation. Now, the various parameters, what we need to consider is, and all states in India have policies. Let me add that. All the 28 states in India have policies and all have manufacturing policies. What will be important here is the location and amount. So what are you investing? Are you investing 10 crores? Are you investing 50 crores? Are you investing 100 crores? Then the subsidy percentages and the values may change. And when you talk about location, are you coming in a developed part of a state? Are you coming in an underdeveloped part of the state? So are you coming in a Pune, Bombay in Maharashtra, or are you coming in a Aurangabad, Nagpur in Maharashtra? So Aurangabad, Nagpur will have a higher subsidy as compared to a Pune, Bombay. So that is something which you'll have to see. And normally all the states will look like, they will look at incentivizing the underdeveloped part of the state. So there are some states like Telangana or Andhra Pradesh where wherever you set up, it is 100% because industrially those states are underdeveloped. But if you are looking at some of those developed states like Maharashtra or Gujarat, you will have to check which part of the state you are bringing up this subsidy, this plant with. Second important factor is the sector. Now, states also, to promote certain sectors, have started coming with sector-specific policies. So you have an EV policy, you have an electronic policy, you have a textile policy of the state. And let me tell you, friends, whatever you are claiming from the center, whether it is textile or whether it is other policies, state is over and above that. So don't get bogged down कि अगर मैंने PLI central government का ले लिया, So whether I'll be able to claim central state ki agar koi textile policy hai to. So then you will be able to claim both the benefits, and that is something which will actually help your project payback and cashback. So if the state has a specific sector policy, please look for those kind of policies, because that will have a higher benefit as compared to the normal industrial policy. So as I told, all the states have industrial policies, but what you'll have to keep in mind, if your sector fits in that sector specific policies, the benefits would be higher. The benefit would also, where tax-based subsidies are there, will depend on the sale pattern. We discussed that sale pattern ke aapka kya sale pattern rahega, and what is your expenditure. So what is your property tax, or rather what is your stamp duty, what is your power cost, what is your power tariff. So all that can also be incentivized or subsidized. Now, what is very, very important over here, if you qualify to be a mega project, and mega project in states definition is based on your investment and also based on your employment which you generate. So in some of the states it is both, some of the states it is one, but mega project is something which can be referred, and this definition changes from state to state. Now, if you are a mega project, you can actually negotiate with the state government on incentives. You can ask that कि अगर ये policy में 10 साल है, can I get 12 years? If this policy में 12 years है, can I get 15 years? So that is something which you can negotiate. And if you see very, very large players, they actually negotiate with the state government on these incentives. So these are very, very important factors which you need to look at. And if you look at this large mega project negotiations, these are actually done by chartered accountants. So if you look at the practicing CAs, very few are actually practicing in this as a service line, but this should be something which should be looked forward to, and this is something which CAs should look as an area of practice. Yeah, this is a difficult area of practice initially, but slowly, steadily, as you get a grip, you should get the hang of what this practice is about, and lesser competition at this point of time at least. So, this is the incentive overview which we gave, that what are those different kind of incentives which are there from a state. So you have an electricity duty exemption, you have a stamp duty exemption, you have an interest subsidy, you have a skill subsidy. So all that can really, yeah. So what are the steps here? Comparison of general versus specific policies of a state, if there is specific. Comparison on policies, incentive across states, ke Gujarat kya de raha hai, what is the Rajasthan giving, is there a comparison there? Option for suitable incentive framework, ke what is the framework? Evaluation of other locational criteria, negotiation for a structured package, and then the incentive framework compliances which is there. Now, just I will spend 2-3 minutes more on where this whole state incentive regime is heading towards. So, because after GST implementation in the country, SGST was the only part which they were reimbursing. So, in the previous regime, they used to reimburse VAT and CST both. So, agar aapka sale outside the state bhi hota tha, still there was a 2% CST on C form, you used to get that incentive. But post the GST regime, because only SGST was going to the state treasury, they were reimbursing only the SGST portion. So then what happens is, बहुत सी जगहों पे if your sale is exports or you have no state sales, आपकी eligibility भले बहुत ज्यादा है, आपकी availment बहुत कम आती है, and that is what states realize. So if you see now how there are 3 methods and how states have been divided in India. You have the tax-based methods, which are done by Maharashtra, Uttar Pradesh, Telangana, Andhra Pradesh. But what has Maharashtra done in that is, it is giving you a reimbursement of gross SGST and not net SGST. Aapko gross SGST वापस मिलेगा. So that is something we'll have to keep in mind. So the eligibility amount and the availment amount becomes much higher. Then look at this capital subsidy. So Madhya Pradesh was the first state in India to bring in a capital subsidy, where they are saying that we will give you a 25 to 40% sort of, depends on formulas which are there, a capital subsidy which will straight away come back to you. over a period of 6 or 7 years. So suppose you are investing 100 crores and is 40% is your percentage, you will get 40 crores back. Whether you are selling in Madhya Pradesh, outside Madhya Pradesh, or exports, it will not be dependent on taxes. So this is sort of a tax dealing kind of a policy which has come. Then Gujarat also followed it, but Gujarat, the percentage is much lesser. The percentage what they are promising is 6 to 14%, which is, according to me, should have been a bit higher. Now see what Karnataka did. Karnataka has taken a step ahead, and they are saying that you invest 100, we will give you 45 to 55% of your project cost back. And how will I give you back? As a percentage of your turnover of the balance sheet itself. So if you have a 200 crore sale, we will give you 2% back, subject to the limit of 45 or 50% of your project cost. So the intention, what I'm trying to put across here is, see how states are really innovating into this. And top of it, Tamil Nadu, they have bought a policy in the lockdown period, which is on large investments, they are giving all the 4 options. Okay, you have a gross SGST method like Maharashtra, you have a capital subsidy method like Gujarat, you have a flexible capital subsidy like Madhya Pradesh, or you have a turnover-based subsidy like Karnataka. You select at the start of the project which subsidy is more suitable to you, and then you claim under that. So the messaging here is there is a lot of competition here. Please keep your, I will say, ears and eyes open to these kind of changes which do happen. Obviously, you cannot be master of all, but at the same time, as professionals, we need to be aware of these kind of policies which are there. So that was on the bit on state incentive. And probably the last topic what I wanted to cover for today is again related to incentive, but this is something many of them, forget the companies, as professionals also are not aware, which is just a single slide, which I'll concentrate more on the concept here. So which is the manufacturing and other operations in warehouse regulation. So this came in October 2019. This is in short form. This is called as MOVR, MOOWR. So this is called MOVR. What is this? What is this scheme about? Now, normally, so there was a certain background to this one. So if you see on the manufacturing space, as a country, whom are we competing with? Are we competing with Europe or a USA? No, you are not competing with those countries. For getting manufacturing in India, you're actually competing with the Vietnam, Malaysia, or Indonesia. So if large companies want to set up their factories, they will look at what is available in the Indonesia, what is available in the Malaysia, and what is available in India. So your actual competition is with those guys. So in October and September 2019, there were 2 measures which were done to actually compete on this space. One was for the new manufacturing enterprises in India. There was a company to be registered after October 19, and you need to start the commercial production before March 23. I'll not go to that nitty-gritties, but your income tax rate was reduced to 15%. Along with a surcharge of 2%, so which comes to around a 17%. Still, you will see there was a significant reduction in that income tax rate. Along with this income tax rate, what they did here is they tried to make the import in the country of capital machinery almost tax-free. It is therefore inputs also, but let's concentrate on capital goods. Generally, what you do at the time of customs, you have a custom duty which is payable at the time of imports of goods in India. However, MOVR scheme provides for duty deferment. This is not a duty exemption, friends. This is a duty deferment. Now, let's spend a minute on the process, how it works. There will be a specified area in your factory which will have to be bonded as a MOVR area. So this will be a bonded warehouse. There is not a separate warehouse you need to purchase for this. This can be a MOVR area within your factory also. Now, if you normally import capital goods, you do pay GST, IGST, and customs on that. So customs becomes a permanent cost, and GST as it is, you get those benefits. So suppose you pay 10 rupees of 100 rupees your machinery cost, 10 is customs and 18 is GST. So your total cost comes to 128, out of which 18 is creditable. Now what happens in a mover scheme? In the case of a mover scheme, you need not pay this duty at all. Both. You need not pay customs also, and you need not pay GST also. So then, is it a permanent exemption? No, this is not a permanent exemption. This is a duty deferral case, where in the case of a capital goods, you will pay this duty at the time of when you are actually disposing of that machinery after a period of 10 or 15 years. So normally, if you see, the useful life of a capital asset would be more than 10 years, depends from sector to sector. So whether it is 8 years or 10 years. So you pay this duty when you are actually disposing of this capital asset after 8 to 10 years. So see friends, you have two benefits here. One is the cash flow, which you save. So the interest cost, what you save for 8 to 10 years, is something which is directly coming to you as a benefit. And what is that value of money? What will you pay at the end of the 8th or the 10th year is the amount which you saved in the first year. So समझो आपने 100 रुपए का मशीनरी परचेस किया, 10 is what you save. You pay the same 10 at the end of the 10th year or the 15th year when you dispose of that capital asset. And if you are re-exporting that capital asset, no need to pay the duty again. So exports के लिए again it will be exempt at that point of time. So see the benefit what you are claiming under this, the value of money which you are saving for your clients. So you will say that EPCG, which is a scheme which is there where also you don't pay the customs duty, how different is this? There are 3 or 4 very, very distinct advantages which are there. One, this does not have an export commitment. If you see EPCG, that scheme comes with the export commitment कि जितना आपने duty save किया है उसका 6 times you need to export over a 6-year period. This scheme does not come with any export commitment. If you are buying this capital equipment and even if you are selling this within India, the produce from that capital equipment, it is not a problem and you can sell this domestically also. And this does not come with any export commitment. That's a very, very big thing, which is benefit number 1. 2, there is no minimum limit in this. So इसमें ऐसा नहीं है कि आपने 1 करोड़ का ही मशीनरी लाया तो क्या मूवर आएगा या इसमें 5 करोड़ का मशीनरी. No, there is no minimum limit. Even if a 50 lakh machinery needs to be imported, you can register yourself as a mover. So mover is a sort of a license which is given to you. This will be given and it needs to be applied and this will be given by the local customs authorities. And this is a license. So once you get that license, it's a permanent thing. You can keep importing. It is not every time you need to take that license. It's a license which is there for that location. Yeah, there are procedural formalities which are there. But I will say at least for the capital goods, this is a very, very good scheme. So the first benefit, as I told, is this has no export commitment. This is no minimum value which is there. क्या आप बोलोगे कि 1 करोड़ का ही मशीनरी लाया तो भी you will be able to claim mover benefits. And third, which is this is also available for second hand and also for I would say expansion units also. So this is not only for newer companies who are being setting up. अगर आपका फैक्ट्री 50 साल से है and still today you want to import any machinery, you can still take the mover license for that machinery which you are bringing now. So friends, I have observed many of our professionals are also not aware of this one. So please plan this as a whole capex agenda and try to maximize this more and more and obviously tell to companies to claim benefit under this scheme. Initially, we felt, okay, what is the government earning out of this scheme? And is this scheme really good to be true? But yes, we had some discussion with the officers. So they said they wanted to make India as a tax-free zone for imports. This scheme is also there for imports, but my focus was more on capital goods and spares. So initially there was a lot of resistance under this scheme कि लोग सोच रहे थे कि ये really benefit रहेगा या नहीं रहेगा. But now, as we understand, India-wide, there are almost 600 registrations under the mover license. And there are smaller players also who have claimed benefits under this. So for the MSME sector, looking into manufacturing and looking into import of machinery, this is a wonderful scheme to look at. This scheme is also there for inputs. But what happens in the case of inputs is, suppose you buy this raw material today, and after 2 months or 1 month, there's a cycle time and this raw material will go in your manufacturing process. You need to pay the duty at the end of the first or the second month, whenever it is put on the manufacturing process. So the saving what you are having is only for the 2 months interest cost, what you will be saving on customs or GST. But the good part in capital goods is you pay at the end of the disposal life. So you're looking at almost, depending on sector to sector, almost 8 to 15 years of deferral of this duty. So this there is there for inputs also, but I will say it is more beneficial for capital goods. And just to reiterate the fact again, all the central government schemes, mover, PLI, state incentive, or any other schemes, all can go hand in hand. Need not look at this as a holistic कि ये claim करो तो वो नहीं मिलेगा. You will be able to claim those benefits which are there. Role of professionals, I guess, and the last part, as chartered accountants, I feel we are the best suited to do these kind of things. I gave you example of, I will say, state incentive. वहाँ पे you can compare states, you can look at policies. And as I told you, you may not be masters of all of this, but at least there should be some inkling. If a company comes with a balance sheet with you for preparing a project report, तो आपने पूछना चाहिए कि आप किधर प्लांट लगा रहे हो, अच्छा आपने ये सब्सिडी देखा हुआ है क्या? You can then go to an expert, but at least if you start that discussion, clients would feel that there is a value add. So somewhere we need to move outside the compliance-based practice and try for new areas under that. Liaise karna hai, apply karna hai, you can do a complete end-to-end on that. And if you see, if you have some of your friends, colleagues in different parts of the country, and if your client comes, I want to set up something in Gujarat, network with the chartered accountant of Gujarat, a guy sitting in Ahmedabad. Normally, if you see in coaching classes and all that stuff, you must have met people who are from different parts of the country. So you must have friends in different parts of the country. And that's the institute motto, right? Network, meet more and more people, network within your firms. So that is something. And who better than a chartered accountant who can really do this? And if you look the enormous responsibility which is cast on these professionals, whether it is certifying those fixed investment or certifying the disbursement, so that is a responsibility which is cast on us. So on basis of our signature, the government is going to disburse of 5 crores or 10 crores or 20 crores of subsidy. So that is something we'll have to keep in mind while we are looking at this. Understand, evaluate, advise. I guess we need to more and more look and come in a business consulting role rather than just being as compliance professionals filing returns on a due date and monthly basis. And what I have seen normally, and that is how I started at least, and I can give a practical experience on this. If you are having a firm of chartered accountants, so please try to look at whether there is a possibility that one of your partners can be totally dedicated to this. And please give him some time, patience to actually start with this activity. Give him a 1 year or a 2 year period as a gestation to start this practice. And slowly, steadily, you will see that this will really take up a huge part of your practice. क्योंकि वो जैसे ही नया कंपनी उसके पास आएगा, उन पार्टनर के पास, he will have someone to send it to you for a tax audit, for a GST audit, or other audits which are there for compliances. So once he comes, the client comes in your umbrella by this new company or new investment or new incentive, what will be there? You will be able to spread out that practice because all compliances you will be able to give in one roof. And the third and the most important point, what I have seen is, friends, you will see that in compliance, it becomes very, very difficult to increase the fees on a year-to-year basis. आपकी लास्ट ईयर की फी एक सर्टेन अमाउंट है, नाउ यू से कि टैक्स ऑडिट में वो बड़ा नहीं है, बोलेगा नहीं नहीं यार वो तो सेम ही काम है. बट व्हेन यू गेट incentive for companies, you definitely get a red carpet welcome, and this is something which you need to keep in mind. Obviously for fees also, because that will give you a fees and the effort what you paid. Obviously there are no free lunches in this world, nothing comes for fee, but the kind of respect what you will get from a client as you get those money would be entirely different than what you are looking at this point of time. So the intention is to look at the whole capex agenda. So with this I will probably end my part. I wanted to cover the whole textile scheme in detail, and I wanted to give a glimpse on the state incentives and mover, so professionals are able to plan this on a consolidated basis. So with this I will request for queries if any, and we can take those questions. And before we end that, I will like to thank the institute for giving us a opportunity to present on what are those schemes which are there, and we'll look forward for more and more opportunities to present different PLIs which come at latter date also. Over to you, Samit ji, for some questions, and we can take those aspects now. Samit ji, are you there? So can we take the
Yes,
question?
sir. What is the purpose of mentioning goods removed under the GST invoice? In any case, goods cannot be sold without GST invoice.
Correct, Samit ji. Very right question for the participant. Oh, it's a obvious which we will have to do. So, आप क्या बोलना चाह रहे हो कि you want to cover the parallel market which is there? So, no reason for that kind of a specific inclusion which is coming in the textile policy. It is as it is assumed that it is going to go by a GST invoice only. So, there is no specific connotation to that to answer.
Sir, is block bottom bag manufacturing considered technical textile in this scheme? Various state government incentives considered the same as technical textile.
Yeah, so what you can do here, and probably what I can do here is write my email ID, probably, and Samit has that. You can send me that specific HSN what you are talking about, and we can see whether this HSN gets covered in the scheme. And even if it is not getting covered, as I told it, technical textiles, there is still a scope to include that because the guidelines are still not out. So what we'll have to do is we'll have to prove to the central government that this is also a product which goes, and if it is considered as technical textile in some of the state policies, I definitely see a good possibility here of getting it covered in the central policy also.
Can you get loan for making investment as per scheme?
Yeah, you can get, so that will be a banking and that kind of a channel which will there. Whether you are getting these funds from a self-finance or whether you are getting for a debt financing will not affect the eligibility under this scheme as such. But whether you can take this letter of approval and then approach the bankers कि इस basis पे आप मुझे loan दो, that will depend from bank to bank. But there is no debar as such whether you are going for a self-finance or a bank finance. The eligibility of the scheme will still remain the same.
Is MOOWR applicable to imported capital goods for all the sectors?
Yes, it is available for all manufacturing sectors. So whether आप textile हो, आप food processing हो, आप कोई भी type का manufacturing हो, MOOR is a custom notification. So that is across all the sectors it will be eligible, and a very good scheme to claim that benefit, I would say.
What sort of fees can be charged, percentage or lump sum?
So I will say that will depend from client to client. So in at least the PLI is what we have seen here, because PLI is largely at least the production link incentive what we have seen. Production link incentives are a large process. आज आपको apply करना पड़ेगा. You will get that approval, and then the third stage will be refunds at a later stage. What we have been doing here, and what most of the professionals who are practicing under this, what they have done is here, they will charge a fixed fee on filing, which will be dependent on your time and effort. They will charge some success fee on the basis of approval what you receive. Because देखिए, all the applicants who are going to file are not going to be approved here. So there will be a success fee, and on the refund there will be a percentage. So it's a mix and match, depends on that. So percentage, what we have seen ranges from 2 to 3% of the refunds what you get in that year. But yes, success fees, percentage, all type of permutation combinations are possible here.
For PLI, whether any company at Gujarat is required to communicate to central government, central department or central government at Delhi, or is there any nodal agency at state level too?
No, so PLI is a central government scheme. So whether you are setting up in Gujarat or in Maharashtra, the online portal will open in the next 10 to 15 days, is what we understand. So we are expecting by month end, yeah, probably 10 November, Ministry of Textiles of the central government will open an online portal. और उस ऑनलाइन पोर्टल पे जाके आपको अप्लाई करना है. So all these players which are there in Surat or this textile zones in Gujarat, they will be able to apply under that online portal. There is no separate intimation to be filed to the central government. Once you apply under the online portal, you are eligible to apply, and then they will apply those criteria and you will get the approval. So there is no separate intimation. You'll have to wait for this online portal to be activated.
The benefit you told are large industry. Is there any PLI scheme benefit for micro enterprise? If so, what are the benefits that can be availed? Please elaborate.
So, आज तक जो 13 PLIs आए थे, the 13 schemes which have come. So, मैंने आपको PLI का जो start में base बताया था कि यही था कि this is for champion players and all of this. But इसमें at least 3 PLIs which are closed now. What's food processing, telecom, and pharma. There was a specific mention of MSME sectors, and there they got those benefits. What we are looking at as PLI, as I see, would be the template how central government incentives works in India. And you will see a lot of these PLI schemes coming in. What we understand, once this phase ends of the first phase of PLI, if I want to say, probably there will be a phase 2 or a phase 3 window also, जहाँ पे MSME and this sector will also be considered, and we'll have to wait for that. But presently, only these 3 sectors you saw PLIs be coming in. Otherwise, this was all for champion and large players, I would say. But the state incentives and mover, you can claim those benefits which are there. Whether you are a MSME mover also, as I told, there is no monetary restriction as such.
Can an existing company in distress or under bankruptcy or closed down operation be acquired by another corporate and claim PLI?
No clarity in this scheme at this point of time, but technically if you see, so अगर एक company या distress या sick company और उसको एक आके दूसरी company ने acquire किया and they say कि we have invested that, but that will be considered as a second hand goods investment क्योंकि वो machinery already उस company ने put to use कर ली थी. So in that case, second hand investment in a country is not considered for PLI scheme. Now, once you acquire that company and then if you are making fresh investments in that one, that may still be considered. But this is largely treated as second hand.
It is not the part of yours, but that one still I am asking, can we charge fees on percentage basis as per ICI Code of Ethics?
Yeah. So, and that's a very correct question here. So percentage fee charging on the basis of ICI ethics may not be permissible. So probably what you will have to do here is, what is percentage is also to be seen here, that it is not a milestone kind of a billing. So people have been doing some working here. Okay, what is the actual refund, what you are looking at? And when you sign that engagement letter with the client, it will be in the form of a fixed fee. But yes, percentage fee on the basis of what you said is absolutely correct. That is not allowed in the case of a chartered accountant who is doing a CA practice. So we will have to go with a fixed fee kind of a mechanism.
Where can we get all the PLI list at any website?
So all the PLI schemes different. There are 13 sectors, as I told, which were covered under PLI. But the one single source where you can get all these PLI schemes would be Invest India website. So there is a separate tab for production incentives, and there you will get the different schemes. Otherwise, the scheme are available on Ministry of Textiles, Ministry of Pharma, but those will be all line ministries what we are looking at. But as a single source, you can get all these PLI schemes under the Invest India website.
In PLI scheme, investment 300 crore. If first year turnover is 1000 crore, then whether 10% rule will be applicable?
Yeah. So in the PLI scheme for a first year, you are saying for an investment of 300 crores, and whether that 10% rule would be applicable? According to me, no. So you should get that incentive on that whole 1,000 crores what you have sold. And for the first year, they cannot put that condition of 25 or 10% incremental. For that first year, my view is that you should be able to claim the incentive on the whole 1,000 crores. But from the second year, you will have to have an incremental of that 1,000 crore then. So 25% increase has to be of that 1,000 crores.
In continuity of that question, and in the next year, 25% minimum will be applicable on which amount, 600 crore or 1000 crore?
No, it will be on 1,000 crores. So it is a previous preceding annual turnover. So the next year, 25% will have to be worked on that 1,000 crores.
Will duties and taxes included in the expenditure category considered towards the column of scheme of investment?
No, so non-creditable taxes are included, but creditable taxes like a normal accounting convention for Section 32 and what is considered as fixed assets as per the balance sheet, the normal accounting conventions will apply. So non-creditable taxes obviously would be included here.
Can a company apply for the other incentive schemes once they enroll in the PIL scheme?
Yeah, they can. So you can apply under mover also. You can apply for the state incentive also. So all those are mutually exclusive. It is not कि आपने PLI ले लिया तो आपको other benefits नहीं मिलेंगे. You can claim those.
What is meant by the term of incremental investment over a certain base year?
So at least in the textile scheme, it is 600 crore, 300 crores and 100 crores, which is. For the other schemes, the base year was considered at 1920, and you needed to do that incremental turnover and incremental investment on that base year of 1920. But in textile, it is that absolute value of 300 crores and 100 crores, which you need to apply for.
What is the possible outcome if an applicant enterprise is not able to meet the minimum threshold criteria in the specific year?
So you will not be eligible for incentive for that year. So अगर ये 5 साल की subsidy है, and if you have not met the criteria for that year, you will not be eligible for subsidy for that year, but you will be eligible for subsidy in year 2 and 3 when you actually met that. But अगर आप बोलोगे कि year 2 and 3 में now I did a very bumper sale and I should get the incentive for the first year also, that is not possible. तो वो आपका गया, जो first year आपका गया वो गया.
How the consolidated revenue of the scheme applicant can be calculated when claims are made by the applicant companies?
So there will be separate refund guidelines which will be issued, because the first year of the refund, as I see, is 24-25, which is still far away. So there will be refund guidelines, but all this would be based on the basis of chartered accountant certificate, which will bifurcate if there is a consolidated or. But in textile scheme, that will not be a problem because there will be a new company itself formed for this. So that will not be a challenge. But in other PLI schemes, if you see, there is a problem of if there are eligible and non-eligible products and all that stuff. So that will largely be dependent on chartered accountant certificate, and certain proratas will have to be applied out there.
What is the time frame period for making successful application under the PLI scheme?
So as I told, the time frame will be 60 to 90 days. And we will wait for the portal to be activated. We are expecting the portal to be activated by 10th or 15th of November. So same for auto PLI also. So this will be a 60 or a 90-day window which will be given, and you will be able to make application under that online portal which is there. And after that, the project management agency will take around 60 to 90 days. So you will come to know whether it is successful or no in that week.
How do the people without familiarity with the digital transaction access the features?
I will say difficult, sir. You will have to have access to all of these resources which are there, because the applications will be online, the refund applications will be online. So yes, I do agree that we are moving slowly, steadily towards a digital world, and that kind of exposure would be required, I would say.
Okay, sir. That one is one person is asking that please elaborate on the other PLI schemes which can be benefits for the chartered accountants.
Yeah, so in a series of PLIs, we have covered some of those PLI schemes, but as I told, out of the 13 schemes, only 4 are open at this point of time. The other 9 are closed. But there was PLI schemes for food processing, there was pharma, there was this solar modules, there is ACC battery, auto, textile, mobile phones, hardware. So all of this was there. So obviously to give a glimpse of all of them would be a bit difficult, but we can have separate sessions.
Please brief about the schemes. Brief means 2 minutes highlights on the schemes.
So yes, 2 minutes highlights is largely the procedures and everything remain the same. Project management agency is appointed. Textile छोड़ के जो बाकी की सभी policies है, there they had kept a base year of 1920. तो base year की जो turnover थी, उसके basis पे whatever you have done the incremental turnover, you got a percentage of that. Like take a food processing. So if your base year turnover was 100 crores and now your turnover is 150, आपको 50 crores के incremental पे percentage benefit मिलता था. There was no restriction of forming a new company on any of these PLI schemes other than textile. And that's why I was a bit surprised why they have bought this in textile, where it was not there as a part of the other policies which are there. And textile says food processing also had a SME segment which talks about कि अगर आपका innovative product है, you can claim benefits under that. But largely it was a percentage of incremental turnover. A specific investment was to be made, a value addition criteria was there. So this was the gist of all these PLI schemes, and the percentage was ranging from 5 to 13% of your incremental turnover.
One last questions. Sir, how the one last question is that how these schemes can be, that one is popularized by the chartered accountants, PLI schemes to their clients.
Yeah. So that, as I told, we may not be masters of this, but keep your eyes open. And I will say as a single source, if I want to say as chartered accountants, Invest India is a very, very good website which you should refer. So Invest India is sort of a marketing arm of the government. So जो भी government के policies होते हैं, Invest India is something what foreigners look into or foreign companies look into when they want to enter India. So Invest India will have a list of all the schemes which have the list of the various approvals required. So keep looking at this Invest India website, which will give you more and more information. Obviously, there is a lot of data out here. In Invest India, you'll have to really see which will be more relevant. But I guess though Invest India is the best source to get these kind of incentive policies, and you can obviously popularize within your client community. But if you want to get into actual implementation of this, I guess there are a lot of experts within chartered accountants also which are doing this. As I told you, you can network with some of those colleagues and you can actually claim those incentives which are there.
Sir, many questions right now has arrived. And that one is particularly whether any existing textile manufacturing proprietorship concern can be registered for MOOWR for the expansion of rupees 2 crore textile machinery.
Yes, you can. You can do that. So if an existing textile company is there and if for the 2 crore investment, you can register yourself as a.
In MOOWR, if capital asset exported out of India after say 10 years, then whether duty will be payable?
No, duty will not be payable. So if it is re-exported after the end of the useful life, duty will not be payable. That will be again be tax-free at that point of time.
For pharma, the first year incremental sales will be calculated between financial year 2019-20 versus financial year 2021-22 turnover.
Correct. That understanding is absolutely correct. 1920 is considered as a base year for pharma. In textile, there is no base year concept. You should have a turnover of 600 crores for the first year. But pharma, the 1920 was considered as a base year.
PLI eligibility in principally granted at which stage? Whether committing investments project approval first or after actual investment made?
So I will say the approval will be given on the basis of your projected investment by the approval agency, which I told is IFCI or CDB in these cases. So that time approval would be given. That approval is a letter of, if I say, yes, I can claim those benefits, but the actual incentive can be claimed only after you do that investment for those years or whenever you are looking at those criteria. So the incentive would be released only after you meet those criteria. But approval will be given basis on your projections, what you give.
Company in distress being acquired by another company, can acquiring company be eligible? Even the additional new investment, since one of the condition of PLI is that it is to be company which is newly registered, while in this case, it is an existing registered company.
No, in the case of textile, you will have to form a new company and probably acquire that, and then you will have to make the fresh investment. So only fresh investment made in the new incorporated company would always be considered, only be considered rather.
Is there any inquiry window for PLI queries?
Invest India is the right source. They have their box there. And if there are any queries, as I told, we can always discuss. I'll put my email ID here. But yes, to answer the question, Invest India is a right source to get queries to answer to much of these queries, I would say.
Whether price increase impact of existing products are excluded in calculating incremental revenue?
No, price increase or price decrease both are considered. So आप बोलोगे कि मटेरियल का रॉ मटेरियल प्राइस ही बढ़ गया, इसके कारण सेल प्राइस बन गया, that's a benefit for you. You will still be counted as a incremental turnover. But अगर आप बोलोगे स्टील का प्राइस ही गिर गया और now the price has gone down, that's a challenge. But price increase or decrease, both are neutral. So you will be getting the benefits on the basis of that incremental turnover, what you do.
If a textile industry not in the production for the last more than 10 years, can it get the benefit of PLI scheme to start within the same manufacturing operation? FRS.
हाँ, but आपको नया कंपनी फॉर्म करना पड़ेगा और आपको नया इन्वेस्टमेंट करना पड़ेगा. You will be able to claim it. So suppose you are in Surat for the last 10 years not working, but now you have formed a new entity as per the Companies Act, and now you are investing 100 crores or 300 crores more, depending on which slab do you fit in, you will be able to claim.
In a case of MOWR, deferral of duty on capital goods will be on scrapped amount or actual amount?
No, the actual amount what you have saved in year one. So it will not be the depreciated scrap value which you will get. The actual amount what you saved at the time of imports is something which you will have to pay at the end of the 10th or the 15th year.
Whether NCLT insolvency cases acquisition will be considered as a new investment in PLI?
No, as we discussed, you'll have to form a new company and that will be treated, this kind of acquisitions will be treated as second-hand investments.
Thank you, sir. Thank you for your nice deliberation. We are thank you to you for that one is, sir.
Thank you.
Your busiest schedule over here, but that one is particularly, it's a very much useful session.
Thank you. Thank you. And we'll look forward for these kind of opportunities.
For their presence hearing and viewing. Thank you all. With this, we conclude this session.
Thank you.